Hey everyone, welcome back to Corporate Decoder, the place where we read through reports and tell you what companies don't want you to know. Today, we're diving into a filing that's a bit like a corporate magic trick. You think everything's fine, and suddenly, bam. New management, new auditors, and a whole lot of reorganized funds. Alright, we are looking at the Cantor Select Portfolios Trust, and we are going to spill some tea about what's been brewing behind the scenes. The report starts with your standard fund overviews and performance summaries for the Cantor Fitzgerald Equity Opportunity Fund and the Cantor Fitzgerald High Income Fund. These summaries contain basic information such as website links, phone numbers, and names of the funds. It may not sound super important, but stick with us and find out what's going on below the surface. First, let's talk about something called a reorganization. Now, this isn't your Con Mary closet cleanout. This is when the Cantor Fitzgerald funds absorbed some funds from another trust called Aquila Funds Trust. All the assets and debts from Aquila went into Cantor Fitzgerald, almost like a corporate merging of bodies. Each predecessor fund's investment objective, policies, and limitations were substantially similar to those of the corresponding fund. And speaking of changing faces, there's a note in the report talking about the accounting firm. Basically, Terweller and Baker said, "We're out," and Cohen and Company came in. The report stated that this happened on November 21, 2024. It also says there were no disagreements with EY, which was the firm used in prior years. Interesting. Now, who's keeping an eye on all this financial shuffling? The report mentions Douglas Barnard as the audit committee financial expert. The report says he is independent, meaning he isn't tied to the company in a way that would cloud his judgment. Let's talk about where money's going. The company had to pay the auditors who did the yearly checkup of their financial records, known as an audit, about $42,000. They paid about $8,000 to get help with the taxes, like getting ready for tax season and figuring out how much they need to pay. Let's see how the Cantor Fitzgerald Equity Opportunity Fund performed. For the year, the Class A shares generated about a 9% return. Sadly, it didn't beat the return of the CRSB US Mid-Cap Index, which was around 15%. This underperformance was blamed on a strong economy where certain sectors did really well, but the fund wasn't as heavily invested in those areas. Digging a little deeper, consumer staples actually helped the fund because they didn't have a lot of money in that sector, but holding shares in communication services didn't do as well. Scroll Cantor Fitzgerald Equity Opportunity Fund/non-numeric. Let's talk total returns based on an investment of $10,000. If you invested $10,000 in 2014, by the end of 2024 you would have roughly $21,000 without load. Load refers to a sales charge or commission charged to investors when they purchase or redeem shares in a fund, such as a mutual fund. There's about $78 million total in the fund. They own 57 different things. And it says here they paid about $922,000 in advisory fees. Time to see how the Cantor Fitzgerald High Income Fund performed. Their Class A shares had a total return of almost 6%, but like the other fund, it didn't beat its benchmark, which was the Bloomberg US Corporate High Yield Index. The report says the fund focused on better quality investments, so it missed out on the bigger gains from riskier stuff. The lower-rated bonds, known as CCC bonds, returned about 15%, leaving the high-income fund in the dust because it barely held those. The company's schedule of investments included names of companies that you've probably heard of, such as QVC, American Airlines, Transocean Titan Financing, and Viasat. Top holdings were Rhythm Capital Corporation, Transocean Titan Financing, and Viasat. This fund has about $60 million total in net assets and owns 51 different things. They paid advisory fees of $75,000 after some reductions. Let's talk total returns based on a hypothetical investment of $10,000. In 2014, $10,000 would be worth about $14,700 at the end of 2024. To wrap things up, both funds note that there were changes to the firm auditing them. They formally engaged Cohen and Company as their new independent accounting firm. The audit committee made sure that they approved them. And finally, the document was signed off by William Ferry, who is the big boss, the principal executive officer, and Brian Curley, the financial whiz. So what's the story here? This report really shines a spotlight on a fund in transition. On the one hand, the fund operations appear to be running smoothly. On the other hand, you have to wonder why the changes were made in the first place. Starting with the high income fund, despite the fund managers claiming a focus on higher quality assets, the fund didn't outperform its stated benchmark. This raises questions about whether or not the strategy aligns with investors who are looking for higher returns and who may tolerate higher risk. It is also worth pointing out that the financial conditions in the future may not repeat themselves, meaning that this fund may be forced to take on riskier investments in the future. Looking at the Equity Opportunity Fund, the returns were not amazing. While 9% is nothing to scoff at, it underperformed the market. What the fund states as their strength, not betting too heavily on one sector, could be seen as a weakness. The fund did not beat the market and has a history of underperformance, but it is trying to turn around by reorganizing its assets. And even though the company claims that there were no disagreements between them and their old accounting firm, it makes you wonder why a switch to Cohen and Company was needed. What does this mean? While operations appear smooth, they will need to perform better to be seen as worthwhile compared to its peers. That's all for today's Corporate Decoder. If you found this dive into Cantor Fitzgerald's latest filing interesting, give us a thumbs up and subscribe for more insights. And let us know in the comments what filings you'd like us to decode next.